Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key. Good morning. Ira Epstein of Linn Associates with your morning flash video, and this is for Thursday, the 20th of September, 2018, time about 9:20 a.m. Central Daylight Time. A lot of economic data that we'll deal with today. Now, while I am showing you the September S&P, the Dow, the NASDAQ, and the Russell, notice these clocks, if you will. I am going to move shortly. In fact, in your afternoon videos, we'll all be watching December. This is the last quotes I'm going to show of September. They go off the board tomorrow, so the market's already moved. These will represent more of the cash values than anything else. Keep that in the back of your mind. As for events, you'll notice that the euro got up very strong today to 118.56. The British pound, even though you're going to read that Miss May is rejecting the plans that are coming out of the summit that's going on in Salzburg, Austria, the market is moving higher, and that's because I think the backdrop is still a positive one, not a negative one. In the grain markets, wheat had a big move up yesterday, giving back a little of that, and you're going to read about President Trump scolding OPEC because oil prices continue to rally too much against the U.S. and with all the money that he says that the U.S. spends in defending their interests, OPEC's interests, that this is wrong and there will be a price to pay. So another event there. For those of you that get my metal reports, gold is something to pay attention to. If you saw my report, and it was massively received. I mean, big response to it. If you haven't gotten it, I'll show you how to get it in a few minutes, but the market continues to wind in that sideways action. Silver tried to get over its last rally high of 14.39, couldn't do it. And we're hearing the copper, one of the reasons that it's been going up, in fact, is because of internally within China, in order to make up for the loss that they're getting in the trade area, they are doing more infrastructure, a lot of copper needed in that. So that's what the word is there. But there's, as I said, a lot of data. The conference board came out, and the August leading indicator up 0.2, prior was down 0.2. Economic indicators, the leading ones there, up 0.4, expected up 0.5, and the coincidence indicator came in up 0.2. So you're getting pretty good data. And that data is weighing itself on the S&P and the Dow. The financials look good because of the higher interest rates, the big cap stocks able to withhandle, if you will, these higher interest rates that have been there. The U.S. National Association of Realtors, existing home sales came in flat. They expected it up 0.5%, didn't get it. 538 million unit analyzed rate, they expected that. Median price of a home keeps climbing, up 4.6% versus a year ago month at 264.8, and 4.3 months left of the inventory. The Philly Fed Index, I mean, this is growth as I see it. Good numbers, still positive overall, so we're still seeing that indicator doing well. Jobless claims down 3,000. You know, we have full employment in America. I think we do. And as I look at what this is, as we get into now the hiring, and if you will, the escalation in October as we get ready to hire the people for the Christmas season, there's going to be a lot of training, new people coming on. I'll be watching that. China signaling, and this is a piece of big news, and this is one of the reasons the euro rallied in so many currencies against the dollar. They're going to lower import tariffs on a number of goods it imports from countries as soon as October. Yes, the U.S. is included in that because in order to do these deals, according to world laws, all the countries get the benefit. The problem is it doesn't benefit us that much compared to the euro currency and other markets that trade more aggressively with China. Japan's Prime Minister Abe, his ruling party put him in for another 3 years. That's a good thing. Norway's central bank, Norges, today raised its key interest rate for the first time in more than 7 years. And on the other hand, the Swiss National Bank, they're going to hold back and see what the European Central Bank does, even though they have such strong GDP growth. So an interesting day in the markets, and one that I think you got to pay close attention to. It's also a day where the Jewish community, which was out yesterday for their holiest day of the year, has returned to the market worldwide, and those that were not, and that's a day where a lot of people do nothing in finance. They're jumping back into markets, and you saw the early surge, I think, a part of that as the markets reopen. Now, as I said, my gold report. My report is detailed, really detailed. And what it shows you is some relationships between the euro, the gold, the price counts. It's going to deal with Bollinger Bands where the markets are right now and how the market is going sideways and the expectations as to what breaks the market out of that. So you're going to get all of this as you come in as to how it works. And of course, the seasonal charts are included. How do you get it? It is free. All you need to do is give us a call at 866-973-2077. You can go to our website at www.iraepstein.com. You'll see an area for the gold report. Click that on, and away you go. You'll have to put in your information and it'll come right out to you. You can also click right up here at any point in order to get it. So if you got the mail with it, you already read it. If not, check your mailbox. And if you didn't ever sign up, now's the time to do it. I'll see you all this afternoon. Good to be back.